India Group Chief Executive Officer and key managerial personnel, Ant, Chief Financial Officer and Whole-time Director, Next, and Mr. Yugal Kishore Sharma, CFO, CEO, One OTT Entertainment Limited. The management panel, we will begin the call with opening remarks from the management as they discuss the company's progress in the digital platform space and their performance in Q3FY21. Following which, we will have the forum open for question and answer session. Before we invite the management, we would like to share a few guidelines for the smooth progression of the event. All participants will be placed on mute mode. We will take questions post the management's address. If you have any queries, you may use the Q&A window to type your question with your name and company name, or you may use the raise a hand feature in the Zoom control panel. We will first take questions from individuals who have raised their hands by unmuting the respective participants to ask questions, and then we will proceed to answer the questions in the Q&A window. I will now request Mr. Winsley Fernandez to address the participants. Thank you, and over to you, sir.
Thank you, Snyder. Good morning, everyone. Snyder, I'm not sure what broadband connection you use, but if you want to stay uninterrupted and have and allow yourself to be heard by everyone, you need to switch to One OTT Entertainment Broadband. Yugal is on the call. YKS, you may want to help him with getting a broadband connection so we can hear Snyder clearly.
He can. Yeah, sure, Vince. I think we should do that. I was just going to say the same thing. Yeah.
It needs to switch.
I will take this with you guys later. Post this. Sure, thank you.
So, good morning, everyone, and thank you for making the time to join us for sharing our Q3 results with you. My colleagues, as Snyder introduced them, are here on the panel. There's Amar Shantopant, who's our whole-time director and group CFO, and Yugal, my colleague, who's the CEO of One OTT Entertainment Limited. So I'm not going to waste too much time. I'm going to start straight away and share my screen, which is the presentation. I hope everyone's able to hear me. If you all aren't, and if there's a problem, please do point it out, and Snyder or someone from our team will try to help fix it as soon as possible. So, like every presentation, when I do start, I just thought I'd share with you the state of the environment today in terms of the industry. We are seeing some green shoots in the broadcasting and cable TV market. The great news is that a report that was done recently, just in November, December, points out to the fact that broadcasting and the cable TV market will surpass $19 billion by 2026. We're already seeing some amount of green shoots. If you're following, and I'm sure you'll are following what's happening in Europe, you'll have seen even Sky is getting its numbers back slowly as the pandemic starts to ease out. So that's good news overall. DTH has seen some amount of traction in the last month in terms of regulatory framework, in the month of December specifically, when the new rules came into play, allowing for the license to be issued for 20 years, extending instead of the current 10 years. And also if they could share transport streams, that would be acceptable by the government as part of its foray to prop up the digital platforms business in the country. Today's newspapers carry the OTT platforms regulation laws that are coming into place, or rather the precursor to that there will be proper guidelines issued for OTT platforms, especially in terms of content that may be derogatory towards children or women, or even anti-national for that matter. And that's a welcome sign, because as a country and as a community, we need to ensure that we protect our principles accordingly. Also, and we'll spend time on this later, the internet service providers are looking to also get the 5G spectrum. That is one of the points. And the last thing, this is very important actually, two last things. The government is working on a national broadcasting policy to look at creating a broadcast regulatory kind of approach that is in the making. And last but not the least, I think you're all aware of the controversy that's that's raving or raging over the TRPs guidelines, and there's a committee that was formed, and they have submitted their report to the I&B ministry. So that is where the environmental regulatory update for each and every one of you I thought I'd share. And if you all want more information, as I've mentioned in the past, I'm happy to provide it. My colleagues Amar, Yugal, and the rest of the team can provide any kind of inputs that you may want. I shared with you in the last couple of meetings that we are on the trajectory to provide infrastructure sharing and to provide business to convert one of the new models into platform as a service. We're very, very pleased to inform you that not only have we signed agreements, including one with one of India's biggest MSOs in the country today. We've signed agreements with infrastructure sharing. Not just that, we've also put in our proposal to the Ministry of Information and Broadcasting, seeking the approval to commence operations and to commence infrastructure sharing. And we should have that approval shortly, and we will keep you all posted either directly through ad factors or anyways, you will hear of it in the media. So that's wonderful news for Nxtdigital. The reason why I brought up this point is that, and it pertains to the second point, is that our entire business, we're looking at effectively devolving and evolving it into a converged digital media strategy. And as I promised in the last two quarters that we spoke, and my colleague Yugal also mentioned about it, and he'll talk about it a bit more later on, is that we've always looked to the fact that we have a strong video base of over 5 million, now over 5.5 million, and we were keen to grow our broadband business. And this is one of the forays that helps that, where we are no longer a cable television company, we're a digital services provider. We have just launched in the regions of Mumbai, Thane, and Navi Mumbai. We've launched our combo products, which is broadband plus cable television has just launched. And not only does this service, you can see the ad up here on the screen, which we've launched. Not only that, but there are also the combo upselling also includes some of the popular OTT platforms. This is the first phase, like Z5 Premium, Voot Select, Shemaru, Eros Now, Epicon. So this is the first aspect of actually demonstrating to you all as analysts and demonstrating to the industry, and not only demonstrating, preparing for ourselves the first phase of our converged digital media strategy, where all our businesses come together and become stronger, together as against individually just being strong and competent. So this is a very important factor. And the vertical of infrastructure sharing, the vertical of the converged media business, all forms part of the strategic media converged strategy that we outlined for our company. And we're very proud to state like that phase one is already rolled out. While that has been happening, and we're very again proud, and this again reflects on the efforts of the last quarter, our broadband business under the stewardship of Yugal and his team has crossed 500,000 wired broadband subscribers, which propels us into the top 5 platforms. I don't want to steal Yugal's thunder. I'm going to request him just to talk about this performance, which has not just propelled us into the top 5 in the country, but where we've also won a lot of awards and accolades. YKS, if I can request you to talk about the challenge, the journey, and then when we come to the KPIs, we'll get into details.
Sure, Vince. Thank you. So I think it was a major milestone for us as a team, which we had embarked a journey in 2016, and the first major milestone was to start to be heard in millions. So 500,000 is the earliest number you can say, and the journey now takes over to 1 million, and we are looking at a very, very robust growth industry wide. And I think we've demonstrated in last quarters the kind of customer response with our customer responsiveness that we could expand our base to by almost 35-40% in the last 3 quarters itself. I think I've also shared earlier that we have kind of made our business model from broadband services corona robust proof, and I think the kind of service levels we are demonstrating in our broadband services. I think it's quite high standard because of the churn that we manage is pretty much low. So that's all pretty much, and we are looking at the next 1 million. Uh, let's look at maybe next 4 to 5 quarters. That kind of number is what we all are working on, because the growth is huge. It could take us 6 quarters, but we have not yet finalized on the number. But the next milestone would be 1 million customers.
Great. YKS, why don't you talk about Facebook for a moment? I mean, Facebook has, has heaped tremendous praise on OIL, and it's a good thing to share with our analysts the Facebook story as well. Just a high level.
Yeah, sure, Vince. I think so. Facebook has been a strategic partner for last 2 years, and we have developed certain projects where we are aiming at connecting the unconnected. If it's a very simple model wherein the wire doesn't reach to areas, like far-flung areas. You have wireless mode to reach there. Similarly, with Facebook, we have opened up almost most of the slums of Mumbai and smaller villages in and around Pune, and that's where various applications are visible. People are getting connected. They are changing their lives, and they are also small micro entrepreneurs who are making a meaningful difference with the robust, always on, high speed internet. And on that they are able to run various applications of their livelihood. And we have run with a campaign called Jazba, Hosla, and Internet. So if you have passion and along with that robust internet, I think anything is possible in terms of micro enterprises achieving their goals. And of course, there are Facebook platforms like Facebook itself, WhatsApp, Instagram to promote such products and services. So that's how the partnership has taken off, and we are working on certain other large strategic projects as well. Yeah, thank you.
Great. Thanks, YKS. I'm going to proceed. I'm assuming everyone can see my screen, right? Yeah. Okay. So I'll take you through very quickly the initiatives that we did in Q3. And everywhere you will see a very important thing. And again, my colleague YKS has always alluded to it, the power of, sorry, I'll just need to, sorry. Okay. There you go. Sorry, I apologize. I'm trying to figure out how to shut that off. Okay. Yeah, I was saying that we always look at, in these quarters, we've started looking at our business very differently. We've started looking at it as literally the power of one. While we may have a video business, we may have a cable television business, we may have a hits business, we may have a broadband business, we may have a content syndication business, we may have a tele-shopping business. The fact is, while there are all disparate businesses, our focus as a company has always been on creating value, as the sum should always be greater than the parts on a standalone basis. And therefore, our entire focus as a business will always be to project Nxtdigital as the power of a consolidated entity which has all the disparate pieces of the jigsaw puzzle that comes together to make it perform much better. So that was one thing I want to share with you before I get into the initiatives. So we've conducted a lot of initiatives during the last quarter under discussion. If you see it, most importantly, we've looked at, again, what I've shared with you on quarters, and therefore it validates what we've been saying. For example, we've looked to upgrade, for example, in terms of customers, that this is the upselling piece where people had connections, had free-to-air connections in rural markets. We've looked at them to upgrade to entertainment. We've also looked to the combo offer, as you can see here, the internet and cable TV combo offers. We've looked to improve our packaging over the last quarter. We've not, and I state this very clearly, we've not fallen prey to the thought of discounts to grow our base. Instead, we worked out smartly. We worked cashback models. Sorry, I'm going to just switch off my phone. Just one second, please. Sorry, I apologize. Yeah. Okay. So we've continued to grow our base all across. We've looked at upgrading. This is another thing which I spoke in the last couple of quarters, that we would be focusing on upselling, on upgrading from standard definition to high definition, from MPEG 2 to MPEG 4. And not only that, we've also looked at reaching far and wide to offer our infrastructure sharing. And if you just look at the advertisement that's here, it basically helps smaller MSOs and competitors and peers to reduce their connectivity costs by up to about 50%. So this has already started paying off rich dividends, as I mentioned to you. We're already seeing the positive traction in this quarter. As I mentioned, we're in the process of seeking the MIB approval, and you will not just see infrastructure sharing, but you will also see the rollout of, not rollout, you will also see the benefit of combo products that have been rolled out across Mumbai, Thane and Navi Mumbai as the first phase. Similarly, we've done very interesting activities in our broadband space. In fact, we've launched the Binge Bindas with One model in the last quarter, where I was mentioning to you earlier that there are OTT platforms that have been loaded on as well, which include Z5, Voot, and others. So overall, the business has reached a significant level of integrated or converged maturity, where all the platforms have now come together to fire on a single cylinder to be able to drive the business growth. And that's reflected very, very amply in the fact that the kind of media coverage that we get today, and we're very grateful for that, because it reflects that we're a company that is a thought leader and is on the right path. And if you look at the kind of thoughts that I expressed in some of these articles, I mean, it's a great feeling for us. I mean, a line like this, post to friend, how a collaborative effort of infrastructure sharing is much better for the entire digital platform industry. The fact that India is ripe for satellite broadband, right? The fact that our OTT business now services over 500,000 wired broadband customers. I think these are all things that reflect very, very positively, very strongly on the on not just the integrity, but on the fundamentals and the character of an organization that is attaining maturity. So that is in terms of the as I tell my team always, that is the fluff side of the business. Now to get down to the nuts and bolts of the business, I thought I'd share with you the KPIs that we do every quarter. And I'm very pleased to tell you again that all the KPIs in Q3, even though there's been a continuing pandemic and there's been some amount of scampering for companies to try to claw back lost ground on the back of heavy discounts, etc., we've been able to continue to keep our business stable. Not just that, we've been able to see strong growth on the back of several strategic initiatives for our broadband business. So if I look at KPIs, our subscriber base for our digital content business has continued to grow from about 4.99 million. We've crossed 5.5 million in the third quarter. Not just that, our ARPUs are very stable. And again here, and it's something again I mentioned to all of you, a lot of you who've been here in the earlier calls, etc. I want to share with you, I kept on telling you all that our focus as a company would be on semi-urban, semi-rural and rural India, which comprises the core of our business, or a significant base of our business. And that is seen in this DAS3 market. If you look at the DAS3 market, our ARPUs, which were anyways high at 138 rupees in a non-COVID year, we're very proud to state that they have been able to touch 151 in the last quarter. This reflects on the strategic initiatives that the company has taken to be able to design packaging that suits the customer in those small markets, in those not small markets, in the lower cost markets. So that is a tremendous benefit that we've seen for the company, where our ARPUs have not just remained stable, but they've continued to grow. Again, when you look at DAS1 markets, our ARPUs have again coming back to levels of Q3 last year. Everywhere we are seeing a pretty comfortable level. But I think the biggest and the best, the most satisfying aspect is wherever we have a significant base, we've seen the fact that innovative packaging has begun to pay off. So that is on the video side of the business. On the broadband side of the business, and I'm going to ask Yugal again to step in, there's been some incredible growth on the back of strategic initiatives. Not only has the business grown by about 71% in terms of subscriber base over last year, But more importantly, what is incredibly important is that we've continued to grow quarter on quarter. And that's on the back of a lot of strategic initiatives. Yugal, can you just overall talk about the strategic initiatives that we've undertaken in broadband, the strategic acquisition, alliance partners, that model and others that you're working on, along with your recent article also on leveraging the LMO base?
Yeah. So thanks, Vince, once again. So I think as we all can see, the market is moving towards more and more cost synergies and leveraging more and more on efficiencies of operations. As I have been always maintaining that the media group of Hindujas have a good asset of fiber under the ground in several cities, and for that this cost becomes our internal cost, and because of this economies of scale that we achieve because of having bandwidth costs and other costs leveraged, we have worked out a ambitious model wherein we have smaller ISPs and other distributors of other competitors coming to work with us to benefit on overall cost synergies. And that's how our inorganic business is growing very fast. And we have been tying up with smaller ISPs in different cities. And once again, we are getting those smaller ISPs also to look at our cable TV piece, because as Win said, moving forward, the mantra is combo, that one home, one customer, one wire, and or maybe to start with two wires. But of course, ultimately, we could put it on one wire as well. Cable TV, broadband services together, and of course, voice today is given, and voice is just like an app on your mobile. So voice is a sorted piece globally. So that's where we are on the overall strategy for growth. Uh, in terms of focus of the team is completely focused on constantly driving not only acquisition but also looking at various avenues to cut down costs on a quarterly basis, because we believe in gaining momentum on profitability. And as we can see, we have had a good jump not only in our subscribers numbers but also on our overall ARPUs have been maintained, and margins have also improved. So that's where we are on overall broadband piece.
Done.
Yeah, Vince, over to you.
Thanks, YKS. So I think just to reflect what Yugal mentioned, our entire focus as an organization is on the converged strategy. We are not looking at individual pieces of the jigsaw. We're looking at a consolidated basis as to how does the consolidated entity really take the business forward on the back of all these strategic initiatives. So that was reflected in what Yugal was mentioning just now. I always share with you also, key KPIs that we look at as a business, and very, very proud to say that even if you look at the challenging period, we've been able to maintain our 90-day net churn at below 2% as compared to last year when we were at 2.1%. The same month's renewal as well has been significant at about 91.3%. We've been able to maintain it effectively. And our on-time renewal has been at about 76%. So when you look at the two critical KPIs of 90-day net churn and OTR, we have actually improved as against what we term as our best year. Our best year was last year, let's not forget that. And we've yet been able to improve upon that, while our same month's renewal has remained very, very consistent, reflecting the overall growth in the business. And these KPIs are not just KPIs for the sake of sharing them with you. They clearly reflect also in the revenue growth on a quarter-on-quarter business across all the entire spectrum. So when you look at the business, we've actually grown our revenues quarter-on-quarter by about 10.24%. So we're very, very proud of that. And that is reflected clearly in the fact that our EBITDA, which was about 51 crores in the last quarter, has grown to about 62.5 crores. That is a very healthy 20.8%. And in fact, so clearly our EBITDA has grown faster than our revenue on a quarter-on-quarter basis, which is very, very impressive. And then when you compare it to the quarter of last year on a year-on-year basis, there's a significant improvement in terms of the the performance, which is over 38% today. And not just that, we've looked to improve our margins. I mentioned to you again, if you recall in the last call, our focus is not just on revenue growth, it's also in terms of profitability, because that reflects the sustainability and the trajectory that a business like this can take forward. So we're very happy to state that our EBITDA margins have improved from 21.9% to 24, and significantly higher than 17% last year. And similarly, on the profit after tax, we've continued with our positive trend. Last quarter, we were nearly about there in terms of a break-even model. And this quarter, we've been able to break even. So that reflects the positivity and the fundamentals of the business in terms of running a race for us that we see as a long-term marathon in terms of performance, rather than just short-term gains that sometimes people do look at. So this is a serious business play as we look to integrate all our business models together. And the last KPI again that I share with you, and again it's a matter of great pride, and this reflects on the fact that we're the only MSO in the country which is just under 100% prepaid. We've been able to maintain the fact that we are less than 1 day in terms of debtor days, and as a percentage of subscription revenue, barely 0.3% is our debtor as of date. So that is in terms of the quarterly performance for Q3, where you can see all the engines have started to fire, or not started to fire, have continued to fire very positively. Also, when you look at the 9-month period, and there was a drop in revenue, but again, we're not really. We have a trading business, as you know, which is the voucher business, and this revenue dip of about 10% is mainly because of the low margin trading business. So a lot of people, had this thing that, oh no, the revenues have dropped. It's not. And how is that reflected? How is that validated? It's validated in the fact that the EBITDA has actually grown. As against 140 crores of last year for the 9-month period, our EBITDA has grown by about 6.7% to 149 crores. And our margins have significantly improved from 18.5% for the period for the 9 months of last year to 20.9% for the same period this year. Amar, I don't know if you want to chip in and explain a bit about the trading business, how it functions. So probably that'll just put a bit of clarity for everyone, Amar.
Sure. Thanks, Vince.
Yeah.
So as you're all aware, one of our businesses is a shopping channel called a teleshopping channel called Shop 24/7. So a trading business is very largely a volume business with thin margins. So we combine hard goods with certain vouchers of Amazon and other parties, which we sell through this process. So it's largely a turnover business, which is a sales aid to our core businesses, right? So this business, due to the COVID, has taken a hit in the current year. But again, like we said, it was more a sales aid than a core business. So having that business coming down, it has not impacted our margins in any significant way, because our cost also has come down. So if you look at our cost structure, our cost also has come down by almost the same component. So this is where this particular business may keep varying up and down depending on the market scenarios, but it doesn't impact our margins in any significant way. Thanks.
Thank you. Thanks, Amar. So just to summarize, and this is pretty much the last slide of where we are at, because I like to keep it short and crisp so that we can have more time to discuss and talk. So here's where we are today as a business. We've been able to continue our growth curve. Our revenues have grown quarter on quarter by about over 10% to about 259 crores on the back of key initiatives. What are those initiatives? Those initiatives are the fact that all the individual cylinders of the engine called Nxtdigital have begun to fire in unison. Earlier, they were all firing pretty much independently. Now they're firing together, and they're leveraging each other for a strong symbiotical or synergistical relationship. So there is a interdependence across all the businesses to be able to ensure that the overall business continues to remain on the growth trajectory, reflected best in the Q3 performance of revenues as well as EBITDA. When you look at the focus of profitability, and this is something, again, we were not keen to just go out and do discounts. We will not sacrifice profitability at the altar of revenue, as I mentioned last time. And that philosophy continues, that a business must be able to be sustainable and have a proper launch pad for growth. And this is reflected in the profitability or the EBITDA growth, where we've seen an improved margin of 24% over 21.9% in the previous quarter. And actually 20.85% growth in terms of value, and about 24% was the margin as compared to 21.9% margin in the previous quarter. So clearly there's been a growth quarter on quarter. When you go to a year-on-year basis, the story remains the same robust story. We've been able to see an EBITDA growth of about 38.5% over the corresponding Q3 of last year. So that reflects very, very strong in terms of performance. And when you look at a 9-month basis, of course, while there's a revenue dip, as Amar mentioned, which is on account of the low margin trading business, the fact remains that the performance of the organization overall has actually improved against last year by recording a growth of 6.7% in terms of revenues over last year, and a margin improvement from 18.5% to 20.9%. So with that, ladies and gentlemen, I thank you for your time. As I promised you in the very first meeting I did just under a year ago, we will try not to do long drawn-out presentations, but try to keep it short and crisp, so we have more time to interact with you. And that's precisely what I've done. And I will hand over to Snyder, my colleague, to take charge from here on. Snyder, if I may request you.
Thank you so much, Vanchi sir. Thank you, Amar sir, and thank you, Yugal sir. Now, ladies and gentlemen, we will take up the questions. Request you to raise your hand or type your question in the Q&A section. We have our first question from Chintan Shah from CS Broking. Mr. Shah, I'm just going to unmute you. You can unmute yourself and ask your question.
Sorry, Snyder, there are 2 questions that have popped up on my screen from Sadanand as well.
Yes, sir. Yeah, true. We will take Chintan's and
Sure.
by
I just saw it. Sorry, I interrupted you.
Sure. Mr.
Hi.
Shah, please.
Hi,
please
everyone.
Go ahead.
So my question is, as many sectors are showing positive growth indication and economy is recovering basically. So what is your outlook for the media and entertainment sector? Particularly, we had just now. So what is the way forward outlook that you are?
So Chintan, thank you very much for that question. And you're absolutely right. All the sectors are showing positive growth, most of the sectors. I alluded to the fact that if you look at even Sky in the UK, for instance, which is getting back customers that they lost, etc., we believe that there is a very positive and strong outlook for the media business. I think more importantly, Chintan, the success of the media and entertainment business going forward is how you can leverage synergies and how you can leverage a symbiotical relationship. What do I mean by that, Chintan? I mean that a Nxtdigital standalone business with video and hits, as in cable television and hits, can continue to grow, albeit to a particular level. Our broadband business, OIL, which is pure broadband, can continue to grow, albeit to a standard level. But put together, along with our content business and other aspects, it suddenly becomes a tremendous engine for growth. And that is reflected in the performance of the last quarter, where our broadband business and our video business has both continued to grow. As I mentioned, Chintan, you've seen the ARPU growth in DAS 3 markets. You've seen the significant broadband growth. So when you look at putting it all together, it shows that Nxtdigital, as a consolidated media group, is clearly on that trajectory of growth. What would it be in terms of numbers, Chintan, is very difficult to say, because from a perspective of, we obviously have a plan, we obviously have a vision, but we are in the process of formalizing those numbers, of formalizing it, because as you know, it's a dynamic business. We literally kind of, while we have a growth story and we have a plan, we literally sit every morning and recast our strategic objectives as we take the business forward. So I hope that answers your question, Chintan.
Yes, sir. Acha, I have another one, if I can.
Sure, Chintan, please.
Okay, so despite being a festival season last quarter, and you have made actually standalone loss in this quarter after reaching break even in last quarter. So, what is your comments on way forward from here? How do you see things going?
Sure. Amar, would you like to talk about the standalone aspects of how we are? Go on.
Yeah. See, Chintan, the whole idea of our reorganizing this business as a media business is not to look at standalone businesses.
Yes.
Right. We were originally standalone companies, but once we realized a particular vision, once we set a vision, we first set our business model straight by ensuring that the legal structures fall in line with the business model. Okay. Standalone, yes, we have declared the standalone results. It is a requirement, and we have declared the standalone results. So there are two ways of looking at it: looking at the financial statements and looking at the business health. Right. So we would prefer looking at consolidated numbers for the business health, because that actually converts into numbers the strategy that we have followed. Right. Coming to standalone also, if you see, it is largely the depreciation and interest. If you see over the years, what has impacted us is depreciation and interest. And like we have maintained in the past, these are only two factors. Interest is a question of our sort of keep correcting a capital structure as we move along through fund raising and things like that. And depreciation, because of our huge set-top boxes gross block that we had, it by its own course in the next couple of years it will peter down. So therefore, first focus is on the operating margins, which are fairly healthy. The depreciation and interest will take care of themselves, and therefore, at this point in time, we are really not too much concerned. And my request again is that to look at the consolidated numbers, because that is what is the business of the company. Okay, I hope I've answered your question.
Chintan, I'll just add to what Amar has mentioned, and it's something that I mentioned in the beginning. I shared with you on our slide 2, and it's available. You can have a look at that. Is that we have developed a converged media strategy. The idea is how do the individual pieces of it's like a jigsaw puzzle, Chintan. We've got individual pieces, but those individual pieces are of no value because they're just individual pieces of a larger puzzle. When you put those individual pieces together, you realize that it forms a completely different visual than what you envisaged when you looked at the individual jigsaw pieces. So our entire focus is how do we take the pieces of the business, put them together to create this amazing launch pad for growth. And that is clearly reflected not just in the Q3 numbers, but also in Q2 and Q1, where we had a clear vision and strategy, which has paid off across the last 3 quarters to take us to a consolidated EBITDA, which has performed not just better than the previous quarter-on-quarter basis, but also performed better on a consolidated basis than what we would have done, than what we did last year. So the idea, our business is always to look at the operating margins, because that at the end of the day is the entire, how do I put it, the entire gravitas of the business going forward. So I hope that answers, Amar, and my point answers the question, Chintan.
No, absolutely, that makes sense.
Thank you, Chintan.
Thank you.
Thank you, Chintan. The next question, Mr. Rajiv Rupani has raised his hand. I'm just unmuting you. So can you just unmute yourself and ask a question? Request you to mention the company, the organization you represent.
Yeah. Am I audible?
Loud and clear.
Yes.
Yes, sir. So thank you for the opportunity. I'm an individual investor. My first question is, earlier, when you were known as Hinduja Ventures, so I believe the company has had 47 acres of land bank in Bangalore. And at that time, you were a debt-free company, and you had some shares of Henderson Bank as well. So can we have an update on that, please?
Right. So Rajiv, I'm going to direct your question to my colleague Amar Chintopan, but I must share with you one thing. The 2 most famous lines of 2020, which you reflected one of them. The first line is, you're on mute, okay? And the second line is, am I audible? Right? So these are the 2, it just struck me as you said, am I audible? I said, oh dear, second line. So sorry, on a lighter note. Yeah. So Amar, over to you, Rajiv.
Yeah, sure, Vince. Thanks. So thanks, Rajiv, for this question. See, Hinduja Ventures, the form it was largely, if you had look at the business segments, it had two business segments. One is treasury and investment, and second one was the real estate segment, right? His media segment was represented by its investment in Henderson Media and Communications. So now, when our business line was largely treasury and investment, we had shares in Henderson Bank. We had almost about 40 lakh shares in Henderson Bank. Nothing to do with the promoter group. These were all trading liquid stocks which we had. And if you see in March, we have gone on record saying that when we have repositioned our company as a media company, it did not make any sense to sort of continue with a significant treasury and investment business. So therefore, we disposed of that asset and then repaid all the debt pertaining to that asset. So by 31st of March, we sold off all the IndusInd Bank shares. Today, we hold only about 53,000 shares. And whatever loan against those shares were there, they have all been repaid. So therefore, even now we report that business as a discontinued operation. If you look at our annual report of last year, the entire result of operations of that particular segment has been shown as discontinued operation, right? So that is one part. Now, that's the reason why you will not find any treasury assets on our balance sheet as of now, as it was in Hinduja Ventures. Coming to a second question of land bank, we continue to hold that land bank. We continue to hold 47 acres of land in Bangalore, and we also hold some land in 5 acres of land in Hyderabad. That continues, but as we have stated in the past, we will keep looking at monetizing it, because every step that we take is to more and more position this as a media and entertainment company and sort of defocus on the assets which really do not make too much sense for this particular business. I hope that answers your question.
So, part two of my question. Actually, this land bank was to be the talk of this land bank has been going on since a long time. I believe about 8-10 years, and I believe Hinduja Realty was to develop it. So, and there was a delay. So,
Yeah.
I mean, are we going to sell that land, or that's the same? Hinduja Realty is going to develop it.
See, the development rights are with Hinduja Realty Ventures. Hinduja Ventures never held the development rights.
Right.
So at what point in time one would develop will also depend on the market conditions and those kind of things, right? And there is the group already has got certain land in that particular location, and it has developed property in that, and then it's also started monetizing it. But then what point in time you will monetize an asset also depends on a proper right time for it, correct? So I don't think the group is in a tearing hurry as of now. It's an asset which has grown in value. For example, that Bangalore land, in our books we carried at about 12.5 crores. Today the value is 160 crores. So the balance sheet has actually got a hidden value which has not got reflected. So our thought, yes, going forward is to sort of sell that land. But at what point in time we will be doing it will depend on an opportune time.
Okay, last question on this land bank. I think that there was a problem of the title. The title was not in the name of Hinduja Ventures. So is that clear? I mean, is the title in it?
No, that problem continues, but the land is in our possession. There are two things in case of land. One is the title, and the other is the possession. Possession is clearly in our favor, and as far as the title goes, also there have been court rulings in our favor. But we need to get that executed. And yes, coming back to your question, the title issue is there. It's reflected in our annual report also. But since the possession is with us, I think it's a matter of time when that matter will get resolved.
Okay. My next question was.
Rajiv, sorry, yeah. Rajiv, we'll have to move on if you don't mind, because we've got others. If we can come back to you, if you don't mind.
Okay, sir. Thank you.
Thank you, Rajiv.
Thank you.
Thank you, Rajiv. Sir, we'll take a couple of questions which are in the Q&A window.
Sure.
We'll start with Mr. Sadanand Shetty, who is a former senior FM of Taurus Mutual Fund.
Right.
Can you please share how does infrastructure sharing business works on the ground? What are the commercial terms here? Who are the partner clients in this?
Sure. Mr. Shetty, good morning. Thank you very much. It's a very relevant question for this industry and for this time. Infrastructure sharing business works very simply. It is basically an asset that we have developed and that we have invested in, namely our HITS platform. There is a satellite already that is up in the sky. There are services that are already being provided to our customers. It is just a question of competition and peers leveraging those services that are up in the sky for their own customers. What it means effectively is that the infrastructure that Nxtdigital has invested in, that asset is now also being shared with a competitor or a peer. So there is, from a unit economics perspective, there is frankly, no unit economics. Everything above 1 paise goes to my bottom line, because there is no significant further investment. We are sweating an asset that is already deployed, which doesn't have a capacity constraint. Unlike, for example, let's say a fiber capacity. Imagine like you have a hard disk. Your hard disk has a capacity of 1 terabyte, and you can only fit information worth 1 terabyte. So if multiple people share it, I'm sorry I'm using a crude analogy, Mr. Shetty, but I hope I'm able to convey my point. Imagine a 1 terabyte hard disk being used by 5 people. So the 5 people can use that 1 terabyte hard disk only up to the extent of 1 terabyte. Now imagine there is a channel in the sky called Star Plus, Sony, Z, or Colors. That channel is up in the sky, and anyone who's within that satellite footprint can basically look up at the sky and access it. There is no limit on the number of people who can access it, no limit on the number of customers who can access it. The only limit is the regulatory boundaries of the country and the geographical boundary of the satellite. So effectively, the capacity is available to everyone. So the commercial construct from a Nxtdigital perspective is that we are sharing that capacity with peers. There is, sir, you mentioned about who the partner clients. There are 3 partner clients. We will make sure that you will be the first to hear through ad factors as soon as the MIB permission comes through, which we're anticipating in the next week, and we hope to have a bit of a big bang announcement about that, because it heralds the start of that project, which will make Nxtdigital a platform as a service truly. And the commercial terms, as I mentioned, are very simple. Everything above a paise is pretty much to the bottom line, by the fact that we have invested already in the infrastructure, and now we're getting a peer or a competitor or a partner to pay for sharing the asset that we've already deployed. So I hope that answers your question, sir, the first one, and then I'll go on to your second one. Mr. Shetty, was I able to answer your first question, sir?
Sir, he has some problem with his audio.
I'll continue to the second question, and
yeah, he's answered.
Okay. Yeah. I'm going to request Amar also to join in on this one. The question is, Snaita, I'll read it out. What has led the EBITDA margin to grow from 21.9% to 24%? Can you share the granular breakup of this? So the granular breakup is something that Amar can talk about. But the fact remains, and this is again repeating what we mentioned to Chintan, and we mentioned earlier also to Rajiv and others. The fact is that we are looking at a consolidated business approach where we're taking disparate jigsaw pieces who were all strong in their own right, whether it was the broadband business, whether it was the content business, the cable business, the hits business, the tele-shopping business, the content syndication business. We're bringing all those jigsaw pieces together, and we're delivering a product that is more effective, cost-effective, and financially more viable than if it was individually done. Because one critical thing is the SAC, the subscriber acquisition cost, starts to come down when you start leveraging your own business across the platforms. What do I mean by that? And this is something that I alluded to in the very first presentation we did. There is a subscriber base of Nxtdigital, the video and hits business, which is over 5.5 million. There was broadband, which was at 300,000 at that point in time. The low-hanging fruits of broadband is first to tap into the 5.5 million that the video business has. From 300,000 over 500,000 today. And there's still that much of headroom to go from 500,000 to 1 million to 2 million, right? It's a matter of strategic modeling, as Yugal pointed out. Importantly in that, the SAC, subscriber acquisition cost, if you were a pure ISP, your SAC would be much higher. Subscriber acquisition cost would be much higher. Similarly, when you look at the video and cable, the cable and hits business, when the cable and hits business goes out to sell, they combine broadband with it. And as a result, they also live off the synergies of broadband, and they're able to offer a combined cost-effective product, again, bringing down the cost of subscriber acquisition. So overall, an independent ISP or an independent MSO would probably have less, how do I put it, less headroom to be able to work out an effective pricing as when broadband and the video business comes together to offer a stronger competitive pricing. So that's how the EBITDA margin has been able to improve. In terms of granularity, Amar, I think it's already there on the numbers that have been uploaded.
Yeah, absolutely, Vince, absolutely.
Right?
I think you explained it.
Yeah. So I think that's something that Mr. Shetty can access. Snyder, you may want to provide the link to Mr. Shetty on this, please. Post this call.
Sure, sir. Yes, sir. I'm on it.
Over to you, Snyder.
The next question, sir, is from the line of Mr. Manoj Alamchandani. What would be additional investment by the company in satellite broadband? It was mentioned by you in a slide that company is ready, that the company is ready. Also, what would be the total industry investment in satellite broadband?
Okay, Manoj, thank you for your question. Good hearing from you again. So Manoj, just to tell you that that slide was basically mentioning that the country is ready for satellite broadband and not the company. It's that there is a significant demand for satellite broadband that will happen. So from a perspective of total industry investment, it depends from company to company. You're hearing about OneWeb, which has made certain investments. You're hearing about SpaceX. But why do I mention about satellite broadband when it comes to Nxtdigital as an entity? I mention it because for any satellite broadband player to be effective on the ground requires a couple of, 3 or 4 ingredients for a successful mix. Of course, one is the satellite broadband itself, the service, which is not what we are alluding to what Nxtdigital has. We have the reach. We have a presence in over 1,000. So satellite broadband requires ground network. We've got 1,500 locations today, points of presence. We have over 9,000 cable operators to be able to sell the service. Then it requires expertise in broadband. OIL, the company, and Yugal has mentioned, has a tremendous amount of expertise in terrestrial and wireless broadband connectivity. Yugal was mentioning about a Wi-Fi project that is there. So there's a very, very strong expertise in being able to roll out broadband and be able to manage broadband successfully. That's the second ingredient. The third ingredient is expertise in satellite connectivity and in the technology that's there. As you know, Nxtdigital is one of the most innovative technology players in the country today, having deployed 32 APSK modulation in the past, which is the only one so far in the world. And that is the third piece or the third ingredient that fits into this puzzle, into this piece. So when you look at all the ingredients, we've got all the ingredients to be able to support a satellite broadband partner that we would look to do in future, and we've got all the ingredients ready for that mix. So I hope that answers your question, Manoj.
Yes, sir. So Manoj has a few follow-up questions also. What is the ROI of one OTT subsidiary company?
Okay, before that, yeah, sure, go on. What is the ROI? Amar, you want to mention that? Do we really look at it from that perspective?
Yeah. Actually, we look at more of profitability rather than ROI. Yeah. So profitability, it's got a very healthy 25% EBITDA margin, and it's a profitable company even on the net profit basis. So that's how we look at it. The net worth of the company is, if you do a rough calculation, the net worth of the company is say 200 crores. It's a debt-free company. So even if you take a 25 crores pre-tax thing, you still come to about 13-14% of ROI on the company.
So there is an anonymous attendee who's asked a question, and I will endeavor I will attempt to answer it as well. It states, Snyder, and I'll read it out. There are too many plans and packages and marketing offers. Can you clearly indicate best lower offer in Mumbai per month with 3-month plan and lowest set-top box? Is it 199 net for box, and is it 150 to 200 per month and 500 per quarter as mentioned in one of the slides? So, sir, let me brief you. The offers that you're looking at is basically directed towards cable operators or our franchisees, because they are the ones who have the link with the customer. And it depends from customer to customer, depending on the kind of usage. Now, if you ask me what is the best offer that I would like at home, it would be, of course, the super entertainment high definition package and 1 gigabit to the home, right? Broadband and all the OTT platforms. So really, it depends on market to market. So we keep on providing our franchisees, our partners, our last mile owners and cable operators. We keep on providing them with options that they would use depending on their markets, because they need to obviously slice and dice it and they need to customize it, unlike offering a one size fits all. So, for example, and I say this without any detriment, and it's something again Yugal mentioned. Dharavi, for example, it may be a lower cost package that we may offer there. In the markets of South Mumbai, we may look at a higher cost package that is there. We may offer a completely different set-top box in those markets. So we will look at mainly integrating all those products, offering them, and we will offer different products and different services to different cable operators to be able to customize it for their localized markets. So that is the key, right? So thank you on that. So I hope I was able to answer that question. I just saw a response from Mr. Shetty. Thanks, that is very useful. Should combined synergy add further tailwinds to the margin? Absolutely. Mr. Shetty, you would know it best. When the kind of combined entity that we have is already seeing a strong tailwind. And once you combine all the vertical pillars that we're looking to fire on, infrastructure sharing, upselling, as I mentioned to you, which is standard definition to high definition, combo products, which is part of our first phase of our combined media, converged media strategy, which is combining video with broadband, with OTT platforms as well. All of these pillars, when put together, will obviously provide the tailwind to the business. So that is something that we're looking at doing. Snyder, over to you, Snyder.
Thank you, sir. The next question is from the line of Manoj Bagaria. Vision of 10 million customer base announced at the last AGM. How long will it take?
Sure.
Will it be driven mainly by HITS platform?
Sure. Okay. So Manoj, thanks Manoj, and good connecting with you again. So Manoj, just to kind of go back to that, the 10 million customers, we have 5.5 million of our own video. We've got 500,000 broadband customers, so we're already at 6 million today in terms of the migrated subscriber base. The base of crossing 10 million, if you recall, I was mentioning, was the managed services or the infrastructure sharing component. We've already signed those agreements with those MSOs. The proposal is already in the Ministry of Information and Broadcasting for approval. Once the approval comes in, it's a matter of how quickly can we convert those markets into infrastructure sharing markets to cross the 10 million service subscriber base. So it is mainly a pass model and not necessarily the direct model. As I shared in the last call, it is the platform as a service to provide the infrastructure sharing to our partners. So I hope that answers your question, Manoj.
So going to the next question, looking at consolidation move in MSOs and LCOs initiated by the largest player.
So Manoj, I don't think there's any reason not to look at it. I think as Nxtdigital, we are a significant player in the market. We believe that the platform that we offer, especially in terms of infrastructure sharing, can bring a lot of players who are who require to reduce their operational connectivity costs, who require to look at I'm talking about independent players and smaller regional players who may look to stave off technological obsolescence, bring them all under a single platform, whether through a strategic alliance method or otherwise. I don't think is not in the offing. I think there are multiple ways and multiple models that we look at it, and that is an ongoing strategic objective of the business. So, Amar, would you like to add anything to that, or was
it's
that
fine, Vince. It's fine. It's fine.
Thank you, sir. Moving on to the next question, one from Mr. Ranga Prasad. Once the regulatory clearance comes, can we expect a sharp bump in the revenues and consequently in profits too? Are any revenues from managed services already factored in the present figures?
Mr. Prasad, good morning to you. I mean, yeah, we're just good afternoon, rather. Good having you again, sir. In fact, good having everyone again. It's always nice to meet like this, at least once a quarter, if not more. So you're absolutely right. I won't say, when you say sharp bump up, yes, it will be when you've migrated the entire infrastructure sharing base. But the way the business works is you will keep on onboarding customers at a time. You won't necessarily onboard 4 million customers or 5 million customers. You'll probably onboard, 250,000 customers each week as you connect them, as you test them, as you roll out. So it'll be a decent growth trajectory that we'll continue to see. Will it have an impact in profitability? As I mentioned earlier, the economics of the infrastructure sharing model, the unit economics are pretty plain. Every rupee that we earn goes straight pretty much to the bottom line. And are there revenues from managed services already factored in the present figures? Yes, but Amar, they're very nominal as of today. Am I right?
Very nominal, very nominal. Just about 100,000 subscribers. So that's quite.
Yes. Yeah.
We have a follow-up question from Mr. Sadanand Shetty.
Yeah.
This PM Vani scheme has any relevance to us? How are we looking at the scheme?
Okay, I think this question and the next one from Manoj, I'd like YKS to take it up, please.
Sure, Vince. Thanks. Yeah, so I think the PM Vani scheme is more towards, I would say, entrepreneurs, micro entrepreneurs, like in the past, who did a PCO for voice, because it does not require a license to create a cyber cafe. So these are like several cyber cafes that will evolve, like what we had PCOs earlier. So mostly this scheme will be for more and more micro entrepreneurs. The way we are looking at it is that we have, by virtue of our business model, thousands of LCOs and partners. These LCOs and partners could be the most probable outfits who would create in their office or nearby in the vicinity where they serve on an average 300 to 500 customers, and will become the cyber cafes of that area. And it is straight away an extension of their existing costs by creating this another additional revenue stream, because the policy says that you'll have to be having a backed up ISP class A service provider who can give a signal to you or internet bandwidth to you, and you can then retail it out as a cyber cafe. So we will definitely be an enabler in this, and definitely it'll add to our I will say revenue streams, but directly there is no play that we have because it's for micro entrepreneurs. It'll be more of an enabler for us, for enabling our LCOs to also become like a having one or two cyber cafes per each of them. So if we have something like 2,000 LCOs in Mumbai, just to give you a kind of a number, there could be 4-5,000 cyber cafes that could cover entire Mumbai by us alone. So that's the level of power that we can create. Like Vince said, that's the true power of one. That one LCO does cable TV, does broadband, will also do a PM Vani scheme and open up a nice cyber cafe. Branding will be co-branded. We will extend a brand to him and create a service so that there's a huge pull coming in from the customers. And he's a well-known guy in that area anyways, right? So students or some people who want to do some e-governance services, or who want to go and book a railway ticket or anything, who are not savvy, who are not having that kind of an internet in their home. So that scheme will benefit them. I hope it answers your question, Manojji.
Sorry, just before we move on to the question, I'm going to revert back to Mr. Prasad. So I was referring specifically to managed services, which is also termed as infrastructure sharing. The managed services onboarding will happen in a stage-wise or a phase-wise manner. We will do kind of, 100,000 at a time or 250,000 at a time as we look to kind of build up the base, because there's a technical aspect that is related to that. So you will continue to see revenues grow rather than just a sharp bump up. Yes, of course, as a period of time and the numbers increase, it will be there. And as Amar mentioned, sir, there is revenue from managed services already factored in the present figure, sir. Although that is nominal, because as you know, we've had some challenges with sending technical teams out in the field to be able to do this. So with that, sorry, Snyder, over back to you, Snyder.
Thank you, Vinci, sir. So we have one question from the raise of hands, Mr. Manoj Alamchandani.
Please.
Yeah. So we'll just unmute him.
Please.
Hi, Manoj. You can unmute yourself and ask a question.
Hi, thank you, Mr. Fernandez. One is, let me compliment you for the KPIs for you. You have been delivering quarter to quarter a regular communication with us, and also you have achieved a very good performance in Q3.
Thank you,
you and your team.
Thank you.
I would like to come to a few key issues. Some of the answers were answered very well by you and your team to my questions, and also a few other questions by other friends. Now, one is in the government policy, it was announced recently that DTH, etc., INB is available for 100% FDI. So what is the impact on the company and on the sector? And further, you have any expectations from the budget and the government policies for the high growth vision for the Indian industry? One is that a specific question. If you can answer, then I will take a couple of other related issues.
Sure, sure. First of all, thank you so much, Manoj. We truly appreciate, the happiest moment when all of us have made, we've all slogged day and night, not just us sitting here, not just Yugal, Amar, myself and the team here, but, our field engineers during the COVID-19 challenge. Along the way, some of our franchisee staff, we're sad to say, as I mentioned, even lost their lives, their family members, and the challenges. And I'll tell you the efforts that we have put in to be able to put together such a performance. The best part about it all is, to hear your words and to know that it was truly all worth it, right? It was worth every late night, every emergency call that we did. So, on behalf of the entire company of Nxtdigital and all our field staff on the ground and our engineers across the country and technicians, sales teams, broadband teams, everyone, thank you for that, Manoj. We truly appreciate your words. And we will endeavor to continue with this performance to the best of our efforts that we can. Coming to your question, Manoj, yes, DTH, the license fee has been improved up to 20 years. There has also been the FDI aspects. I think what the government is trying to do, and rightly so, is it's making the path for the media and entertainment industry a greater level playing field. And I think that is going to benefit everyone in the long term, whether it is the MSO business, the cable television business, whether it is the hits business, whether it's the DTH business. I think overall, we all stand to gain as a result of activity improving in this sector. This sector has always been is considered one of, as you know, it's an essential services sector, cable television and broadband. But having the ministry and having the government always support it is a good thing. And to be honest, the kind of initiatives that the ministry has taken to help the industry, especially during the COVID challenges, the whole, our Prime Minister's vision of a digital India is incredible. Today, like I keep on telling people, the true aspect of a digital India is in a place like Ladakh, where today all our troops have digital services, digital television from us. Today it's in Lakshadweep Islands, which is not connected anywhere but has a digital service of Nxtdigital providing signals there. So I think the entire mission to push digital India, skill India and make in India, I think that's what we want to see in the next budget continuing. I think that is the, our entire business was built on the strength of our network, namely our last mile owners or local cable operators, the franchisees. We'd like to see them continue to grow and sustain and grow their businesses. And as long as the budget takes care of them, I think from our perspective, we're very happy from that role. Amar, you agree? Would you like to add anything from your side on the budget to Manoj's?
Yeah, so nothing specific on the budget, Mr. Manoj. It's just a few clarifications on GST and things like that. But otherwise, I think the support, like Mr. Vince said, the support that we received from the government, especially during the lockdown, has been tremendous. So I don't think we are really looking at any major incentives or major support in the budget. Yeah. Thanks.
So, I hope that, Manoj, I hope that helped.
Yeah, thanks. Very, very well. Now, related thing is based on your presentation, what is the size of the industry and what is our company's market share approximately?
Okay. So when you look at the MSO industry, or you look at the cable television industry, the cable television industry is split up into what we term as the pan-India players and the the independents and regional MSOs. So the pan-India players today are roughly about 39 million homes, while as the rest is about 61 million homes, right? Which is what we had shared earlier as well, Manoj. So out of those 39 million homes, we already have 5.5 million homes in terms of our market share, which is our cable television and hits business. And we are looking to expand that base, Manoj, mainly through our infrastructure sharing or managed services model. The partners that we have signed up with have over 5 million customers. So as we onboard them, we will have obviously crossed 10 million of a service base, and we will look to continue to expand that to whatever level we can. Sorry, I was just going back in my thoughts. 31 million is the pan-India players, out of which we have 5.5 million, and 69 million is the regional independent multi-system operators who form the largest base for offering infrastructure sharing or managed services to. Having said that, we're very proud that the biggest partner that we've looked at to sign on, whom we've signed with an agreement earlier this month and put in a proposal to the Ministry of Information and Broadcasting, is one of the top 3 players in the country today. So we're very proud that we've been able to offer our services to them, and we look forward to providing that infrastructure sharing. As I mentioned earlier on the call, we will share the details as soon as we get the approval, which we anticipate should happen very shortly.
So thanks. So you mentioned about 31 million and
Hello,
5.5
Mr.
million.
Manoj.
Hello.
Sorry, but there are a couple of questions in the queue. You may have to, we can connect later offline because there are a couple of questions.
What we can do is let's take the other questions, and Manoj, if you don't mind, we'll just take what's pending and then come back to you. We'll continue.
Yeah, sure. Wonderful. We'll do offline. Just to do, I think we have about 16 to 17% market share in terms of subscribers. Can you indicate a number in terms of revenue market share? Then others, we can take it offline.
Yeah, I think let's take that offline because I'll have to do some back of the envelope calculations, Manoj. I'm more than happy.
Fine. Wonderful, and thank you. And I wish all the best to the team in increasing market share on quarter-to-quarter basis and year-to-year basis and fulfill a vision. All the best.
Thank you so much, Manoj. Thank you.
Thank you, Mr. Manoj. So moving on, Mr. Sadanand Chetty has some follow-up question.
Please, sir.
How is the geographical footprint for infrastructure sharing? Is that restricted to areas that you operate?
Okay. So thank you, Mr. Shetty, again for that question. The satellite, which is the HITS satellite, covers all of India as a geography. In fact, it goes beyond India, but regulatory-wise, it obviously covers India completely. So from an infrastructure sharing or managed service perspective, our business can offer the service anywhere in the geography of India, including the far northeastern reaches, where, by the way, we have a presence, including Ladakh and Kargil, where we very proudly have a presence, including Andaman and Lakshadweep, again, we have a presence. So anywhere across India, if someone requires managed services or infrastructure sharing, across the geographical limits of India, we are able to provide that service without any problem because our satellite covers all of it. We don't need a wired presence where you need to look at a geography because it's a satellite. It's a footprint aspect which covers all of it. So I hope that answers your question, sir.
Yes, sir. Thank you. He has acknowledged. So the next question is from the lines of Rajiv Rupani. Of hits launched 3 to 4 years ago, how many LCOs and customers have you added to your network throughout?
Right. So, Rajiv, thank you for that question. We shared the slide, and this is available in terms of the HITS platform, where our HITS platform has continued to grow. And totally, when we are looking at 5.52 million today, if I refer back to the slide, I think just under 60%, I think, is driven by our HITS business, and the balance is from our cable television business. Interestingly, though, I want to make a point to you as well, Rajiv. A lot of those businesses that come under the cable television business customers are actually could be fed, as in the video signal could be provided through the HITS business, the HITS platform as well. So it's an integrated service. What we reflect effectively is how many get delivered via HITS and how many delivered via CATV, so that breakup is already present. In terms of LCOs or franchisees, today we have about 9,500 LCOs across the country. Close to about 6,500 of those are HITS platform LCOs, and that is a number that keeps on increasing.
Thank you so much for that. Moving on to the next question from the lines of Sonak Mayani. What is the average selling price of Henderson shares? How many were sold in Q4 FY20 and the selling price?
Amar?
Yeah.
Sorry.
So these IndusInd Bank shares were sold in different lots at different periods of time. So maybe we could take this offline so that I can be able to give you an average price and the quantity also I can give you, because this is not one large sale. It's been sold at different points in time. We'll take this offline and then we'll discuss it.
Yeah, and it's actually there in the public domain. Sorry.
It's there in the...
Yeah, it's there in the public domain. Rajiv, just to add to your question, I was just trying to bring, so about 51% is 51, between 51 and 55% of our base is fed by HITS, and the balance by cable television or terrestrial networks. Don't forget, we have a significant, as Yugal was mentioning, we have a significant presence in terms of underground fiber in key cities, etc. So we will continue to sweat those assets as well. Yeah, Snyder, over to you.
Yes, sir. The last question we'll take for the day from the lines of Rajiv Rupani. How do you plan to compete with Reliance, who has access to content, Balaji Telefilms, and stake in MSOs?
So I think I've answered this. I think in every quarter that's there, and I'll keep it brief. And I'm happy to connect with Rajiv and take him through it. We are a digital services provider, right? We have no stake in any content. While we have a small content production arm, we don't have any television channels, etc. Our business model has been premised on working with a network that we've built over the last 25 years. Some of the LCOs or the LMOs have been with us for that journey. We are in our 25th year. In fact, Feb 23rd, we complete 25 years of operation. Our business model has always been hinged on being ahead of the curve technologically and offering services that we believe are important for our customer base. Having said that, for example, is HITS. Our focus has been on growing our significant bases in semi-urban, semi-rural and rural India. As I was sharing today on the slide, our ARPUs have grown in those markets. Our bases have been significantly growing there, and we share always the breakup of those markets. So we will continue to focus, and I think everyone has a different business model. Our focus is on delivering services via satellite. Our focus is on a combo product for our existing customers, and we will continue to grow. I think everyone has their own specific business model. Everyone has their own aspect in terms of what their core areas are. And as they say, the proof of the pudding lies in the eating. And when you look at the last year's performance, when you look at the last 3 quarters performance, that is 7 quarters in all, the business has continued to have a very clear strategized focus, which is a converged media, digital media strategy. We are looking to push our broadband along with our video services. I mentioned in one of the calls that we have over 230, I think 236 customer profiles that we cater to. Each profile of the customer has a different requirement, and I go back to someone's question that we raised earlier. I think Rajiv raised the question itself, that a customer in someone anonymously actually, a customer in South Mumbai may have a different requirement from a customer in Ghatkopar, will have a different requirement from a customer in Odisha, will have a different requirement from a customer in Asansol, will have a different requirement from someone in Guwahati. And our whole business is hinged on the premise that we are able to look at catering to multiple customers across multiple profiles by creating multiple products across a integrated platform. So that model will continue to stay. I hope that answers the question.
Vinci, sir, that was the last question. I would like to hand it over to Vinci, sir.
Thank you. Everyone, first of all, again, I thank you. I apologize. I meant to wish you all a happy new year and hope that the year 2021 has started out on a good note for you all and your families and all your loved ones and colleagues. These are challenging times, but the good thing is that we can see light at the end of the tunnel finally, and the industry is picking up. We believe that the economy is clearly revealing the path forward. We have, from a Nxtdigital perspective, as you can see, we have a very clear strategy and a very clear vision. Our whole focus is on a converged media strategy. We do not look necessarily at independent, disparate units of our business, but we look at how can all the units come together and provide a much stronger, robust trajectory for growth, which you can see in Q3. That strategy and that implementation of that converged digital media strategy will continue, and you can see the results for themselves. And when you look at it on a consolidated basis, that will continue to be our focus. And we hope to see you all in the next quarter when we will do our financial year results. And I just want to tell you, please, all of us are absolutely approachable. If there is any questions that you have, any queries, any clarifications that you seek, we believe it is important to address those clarifications and to provide, however uncomfortable, as I tell people, the questions are, we would like to make every effort to answer them. So in case if there's anything that we probably skipped or that's probably skipped your mind, please feel free to connect with us. We are all available either directly or through Snyder and the AdFactors team. We're available. On behalf of Yugal, Manoj, on behalf of Yugal, Amar, Snyder, Sanjeev, Manoj, my colleagues Anand, and everyone else who's on the call, Banu, I just want to thank you all and to wish you all a happy weekend. And Amar, Yugal, if there's anything else, we can look to.
Just thank you, everyone.
Thank you.
No, thanks everyone, and wish you a very happy new year, like Vince wished. Thank you so much.
Thank you,
Thank you,
everyone.
sirs. Thank you, sirs. Thank you, everyone, for participating.
Thank you.
We look forward towards meeting you next quarter.
Done. Thank you.
Thank you.